Hi, everybody. Welcome back to Ox Talks. Happy New Year to each and every one of you. And let's all pray for good things to come in 2025 for each and every one of us. I wish everybody a wonderful new year and healthy and prosperous coming year. Appreciate all of you. This channel's been up and running now for just a little bit over a year. And I was sitting in Las Vegas with my family just the first week of January of this year in 2024, and the channel had reached 4,000 subscribers. We're just shy of 8,000 subs right now. So if you guys can spread this video around and subscribe to the channel, sign some folks up, that'd be great. I will be back in Las Vegas next week for the annual family 4 or 5 day trip. I'll be checking in from there, doing some shows from there to say hello. But it'd be great if we could hit that 8,000 subscriber number as an anniversary this next week. We are growing the channel. And so again, thank you. Couldn't do it without you guys. As you know, this is not my source of income. I do this purely out of enjoyment, and because I like to, share thoughts. I like to talk economics. I like to talk about my profession, which is law. I like to share things I've learned over many years of getting a lot of bumps and bruises from economic downturns, and simply what I experience day in and day out as a practicing attorney. So again, for those of you that do watch the show on a regular basis, been with me since the beginning, I appreciate you guys. Let's continue to grow this channel and wake people up, because 2025 is it's not going to be all, roses, not all rainbows and unicorns. It's going to be bumpy. Okay. Now, hopefully there will be opportunity. I believe there will be. I'm going to share 2 stories with you today about the crumbling real estate market, and what we will see unfolding in this next year in 2025 as it relates to both residential real estate and commercial real estate. And you might think, well, it doesn't pertain to me. I own my house, or I'm a renter. But if you guys are banking with, if you have bank accounts, this real estate, these defaults are going to start accelerating. Foreclosures are going to accelerate, and this will have an impact on the banks. This could, I say could, trigger, another round of bank failures, certainly in the mid-size and smaller banks that are less able to continue to absorb these losses on their books. So have a great New Year's tonight. Celebrate, with health and safely. And let's jump into 2 stories I saw from Wolf Street. One came out yesterday, deals with the residential situation in this country with housing. And the next article came out today, just recently, talks about the commercial real estate market. So this says the buyer's strike continues. Pending home sales remain deep in the frozen zone. Says prices are still way too high, and we all know that. Buyers now have lots of inventory to choose from, including heavily promoted new houses, not to speak of new condos, of which there is a flood of supply on the market and coming on the market. Okay, supply of existing homes for sale at 3.8 months was the second highest, for any November over the past 8 years, 2017 through 2024, behind only 2018. Okay, what that means is that the existing home sale supply right now on the market across this country is almost 4 months. All right, and so you've got to go back again, almost 8 years to find a November where the home supply was that high. Inventory of completed new houses for sale spiked by 57% year over year to 124,000 houses in November, according to Census Bureau data. This is supply to the overall housing market. Home builders are trying to find buyers for these completed spec houses by piling on incentives, including costly mortgage rate buy-downs and by cutting prices, thereby bringing monthly payments below those of equivalent existing homes. It says, but their sales have held up reasonably well while existing home sales have plunged to historic lows. Look, new home builders can only sustain this for so long. They can only buy down rates so much. They can only offer so many incentives. And you're going to start to see a massive uptick in 2025, in my opinion, in the amount of new homes that are also sitting on the market. It says inventory for sale at all stages of construction, from not yet started to completed, rose by 8.1% from the already bloated levels a year ago to 493,000 houses. That's the highest since December of 2007. Supply jumped to 9.1 months, which does not include inventory of new condos for sale. And again, you can look at the new single-family houses for sale, all stages of construction, and look at this chart. And we have to go back almost again to 2000. So here we are over here. Okay, we're over here now. This is the great financial crisis there. Okay, so look where we're heading, guys. All right, look, this is the reality situation. You will not hear this from the mainstream media. Okay, applications for mortgages to purchase a home in the latest reporting week, seasonally adjusted, rose 5.6% from the collapsed levels a year ago, but we're still down by 14% from the same period in 2022, down 45% from 2021, and 40% from 2019, according to data from the Mortgage Bankers Association. Okay, so the reality is that you're going to see all of this come to a head, I believe, in this coming year, okay? Because sellers are going to be forced. They're going to be forced to start dumping prices. Home builders are going to be forced to start dumping prices, okay? So some of you might say, well, look, if you're a buyer, that's a welcome relief, right? But look, we still have mortgage rates that are traditionally high, okay? They're still over 6%. All right, we're just several years ago, you're getting into a 30-year fix for 3%, high twos, okay? Let's see how this settles out in the housing market next year, but you're going to see a lot of these people that are in distressed situations where they're not selling, they keep dumping the price. They get to a certain point, don't forget, if there's debt owed on these properties, they cannot reduce the price below the level of the debt unless they're going to get into a short sale situation. You're going to see an uptick in short sales, and you're going to see an uptick in foreclosures in the coming year. Let me talk about quickly the situation with commercial real estate. This is even worse, all right? And this is where the banks are going to be impacted. Delinquency rate of office mortgages that have been securitized into commercial mortgage-backed securities, CMBS, spiked to 11% in December, a new all-time high, surpassing even the debt meltdown during the great financial crisis when office CMBS delinquency peaked at 10.7%. It was 10.7%, guys, during the great financial crisis. It's just spiked 11% this month, December of 2024. That's according to the data by TREP Today, which tracks and analyzes CMBS. Over the past 24 months, the delinquency rate for office CMBS has exploded by 9.4 percentage points, from 1.6 to 11%. Everything, it says from everything is just fine to complete disaster. The office sector of commercial real estate is in a depression, and office debt just keeps getting worse. An additional $2 billion in CMBS office debt became newly delinquent in December. So of the major sectors in CRE, office debt is in the worst shape. All right, they said 11%, compared to lodging 6.1%. Permanently troubled retail, 7.4%. Those are the malls that are going the way of the dinosaur. And multifamily, 4.6%. It says, but CRE debt on industrial properties such as warehouses and fulfillment centers, thanks to continued boom of e-commerce and brick and mortar infrastructure, remains in pristine condition with delinquency rate of just 0.3%. But everything else is literally collapsing. High vacancy rates in the latest and greatest buildings allow companies to move from an older office tower, it says, into new fancy digs while downsizing office space at the same time. So landlords are failing to make their interest payments on these loans, okay? And what's happening is a mortgage doesn't count, it says, if the landlord continues to make, or doesn't count as delinquent if the landlord continues to make the interest payment but fails to pay off the mortgage when it matures, okay, which constitutes a repayment default. All right, so if repayment defaults by a borrower who is current on interest were included, delinquency would be much higher, okay? So basically they're just doing the bare minimum. These maturity dates have come and gone, and guess what the banks are doing? They're just kicking the can down the road. They're extending these maturity dates so they don't have to accept this on their books as a complete loss. So the extend and pretend has been a feature in 2024. As a result, the problems are getting dragged into 2025. Extend and pretend can get lenders through a temporary crisis, but not through this kind of structural reckoning. Okay? It says extend and pretend came with the motto, survive till 25. But look, the basic premise of that is that interest rates are going to come down sufficient enough where these landlords can refinance, okay, these properties into a rate that allows them to get a new loan, okay, and continue on. And we all know, if you've been paying attention to what's going on with inflation rates and with the Fed's recent hawkish tone, we may very well see a much slower pace of rate cuts in 2025. And I wouldn't be surprised if we see a total slam on the brakes of rate cuts and possibly even a reversal of course with rate hikes if they don't get inflation, the transitory inflation under control. So again, will this trigger another banking crisis in the next year? All of us need to be worried about this and concerned, just paying attention, okay? It's not doom and gloom. It's not panic. It's just paying attention to what's going on, okay? Because we all have bank accounts, and you've got to make sure that, and you don't even know which banks are most exposed. They don't publish that. They purposely keep this stuff hidden from the public. So you don't even know if your bank is teetering literally on the brink of failure. You won't know until you get down there the next morning and the doors are closed and then there's a problem. You can't access your money. So be careful. Don't have all your eggs in one basket. Consider having more than one bank. Certainly do not have money in any account that exceeds the FDIC insurance level. And that's a whole nother joke, because that program is sufficiently and woefully underfunded too. Anyway, a little bit repetition. I know we've covered some of these items before on the channel, but I'll keep driving the point home because it does apply to us. Now, how about opportunity? Okay. What is, one person's failure, maybe losing a property, may present opportunity to others. If you have dry powder, and if you're a cash buyer, and if you have excellent credit, okay, you may be able to, in this next year, 2 years, if that let's say interests you, to get into some of these real estate opportunities. All right. So obviously everyone's gonna do their own homework, not legal advice, financial advice, but wealth is made when times get very tough. Those are the times when a lot of people get very, very wealthy. Not all about that. It's a lot of pain. A lot of people lose. I sure hope 2025, is not as rocky as it's looking at like it might be. I'll leave it there today. Again, Happy New Year. Thanks all of you guys for supporting me, supporting the channel. Let's make it a great, prosperous 2025. Talk to you all soon. Bye.